Hey guys, all content discussed in this channel is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. This past week, the S&P 500 had its fourth consecutive weekly loss and worst performance since 2020. With the end of April, it is down 8.8%, the Dow has lost 4.9% and Nasdaq plummeted 13.3%. The 10-year U.S. Treasury notes remained relatively unchanged. The reason for this is the surging inflation and the expectation of the Fed hiking up rates at 50 basis points, which we will know for sure in this upcoming week. This week will be crucial because we will have the Federal Open Market Committee. Let's go over what to expect the entire week. On Monday, we have earning reports from Expedia, Lowe's and Moody's. On Tuesday, we have day one of the Federal Open Market Committee. We expect the Fed to raise the benchmark Fed funds rate by 50 basis points. Markets have been pricing this in this past week. We will also have earning reports from Pfizer, Airbnb, Starbucks, Thomson Reuters, Hilton, BP and S&P Global. On Wednesday we will have day two of the Federal Open Market Committee, where we can expect the rate decision to be finalized. We will also have the earnings from Uber, Allstate, eBay, CVS and Marriott. On Thursday and Friday we will have some earning reports from some lesser-known companies. Many people are anticipating a huge market rally after the Fed committee takes place. The idea behind this is that unless they announce something unexpected, the rates have been priced in and a bull rally should ensue. The VIX index, which measures implied volatility, is currently measuring options market as pricing this or nearly 2.1% daily move. My own analysis of this is that the S&P 500, the most important benchmark, will rebound after the meeting, but it will not be long-lived. The upside is very limited in the current conditions and will likely begin dropping again. Based on how the markets are looking, I think it very likely that we could see the S&P 500 break under $400. The bearish sentiment being felt right now is the highest it's been since the post-financial crisis of 2008 and 2009. Remember that psychology is everything and the expectation of bad things essentially guarantee it happening. So the fact that everyone is becoming more bearish over time is only leading people to not spend as much money, to not buy as much and to be more risk-averse. This will not help the economy rebound and could ensure a full market recession, which at this point seems more likely than ever. The Fed has made it clear they want financial conditions to tighten to begin directly fighting inflation, but this approach could very well lead to a recession itself, so everyone is on the lookout and on edge. There are no known catalysts or events announced to happen with GameStop or AMC this week. Before we conclude this short video, I want to share what Berkshire Hathaway CEO Warren Buffett had to say about Wall Street this weekend, which caused quite a bit of a stir. Buffett, the greatest investor of all time, said, and I quote, "Wall Street makes money one way or another, catching the crumbs that fall off the table of capitalism. They don't make money unless people do things, and they get a piece of them. They make a lot more money when people are gambling than when they are investing." Buffett noted that a large number of American companies became poker chips for market speculation, and cited Wall Street brokers making more money from betting on the soaring costs of call options than from simple investing. Charles Munger, Buffett's longtime partner, said people who know nothing about stocks are being advised by stockbrokers who know even less, asking why would anyone want their country's stock to trade in a casino. I cannot say I disagree with anything they said. In fact, I strongly share the exact same opinion. We have seen all of these so-called sophisticated investors who the media lavished like Cathie Wood, all of a sudden come face to face with extraordinary losses. We have seen brokers use and abuse clients. People are not doing their homework on stocks and betting on all types of crypto. Pump and dumps have become almost synonymous with retail trading. The thing I wanted to point out is that none of this applies to GameStop or AMC. These two stocks in particular have received an innumerable amount of analysis by all types of people from all walks of life, from previous stockbrokers to data analysts and economists holding PhDs. Investing in GameStop or AMC is not synonymous with gambling, because the homework has been done and continues to be polished day in and out. The markets are inefficient and unfair because Wall Street managed to pay politicians to look away and enact policies that only benefit them, but we are not leaving. The day will come when we get payback for all that has been done to us, and meme holders will be the most rewarded. Come join my Discord already, link is in the video description and comments. There has never been a better time to join and get day trading alerts to boost your portfolio balance. We have over 6,400 members already. It is a very engaging atmosphere, and even more so if you are looking for a serious day trading group. Links will be down in the video description. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip and to the moon.